Luke here from LAGFX. Just thought I would jump on here and provide you all with a quick case study video on silver to the US dollar. This is a very important precious metal alongside gold, and I think it's very important to complete these case study videos from time to time on pairs like this so you guys can get a better understanding on my longer term and shorter term bias. By you guys getting a better understanding on how I'm looking to tackle the markets and my thoughts with these markets, you are then able to take that information away with you, apply that to your own charts, and hopefully get involved as I do in these markets, profiting alongside me. If you have any questions with regards to the analysis I go through today, please just leave them in the comments below. I can get back to you as soon as possible with an answer. And if there's anything that you're unsure about that I discuss, whether it's order blocks, price action, mitigated, unmitigated areas, things of that nature, if there's any terminology you don't understand, again, rather than not knowing and not finding out, leave them in the comments below, and one of the other subscribers or one of the people watching may help you out, and if not, I definitely will do. Now, if you do go on to enjoy the video, don't forget to leave it a thumbs up. As I always say, the support you guys continue to provide is really appreciated. We're well on our way to 4,000 subscribers, which is amazing. I want to get there. I want to get there as soon as possible and continue to grow and share the knowledge within this industry. Now, what we're going to do is start from the highest time frame. So I've gone to the 3 monthly time frames. And this is just so we can get a good understanding on the overall bias of the market and the overall direction. By us getting a good understanding on the direction, we know how we should be looking to tackle this market and where we should be looking to enter from, depending on that said direction. So looking here, what I'm going to do is mark out some of the swing points. So you can see that we have a low set followed by a higher low, and it looks as though price is going on to create a higher high. Okay, so with this being said, we want to be getting involved in this market in bullish opportunities. Why? Because this market is trading us in a bullish way. It looks to be trading us in a bullish way. So it's very important that we trade with the prevailing trend. As I always say, the trend is your friend. And that's because we have a higher probability of being successful when we trade with the majority traders. You may be wondering, well, Luke, how do we know that this is the new higher low and it's going on to create a higher high? Well, we would look at this previous impulsive wave and we would mark out any areas of interest, okay? Now, what we're going to do is we're going to cheat a little bit. And I advise people to do this when you are doing your back testing. So what you want to do is you want to mark out the highs or the lows, depending on the direction you're trading it in. It's a bullish market, mark out the lows and drag price back and see what it's traded into. If it's a bearish market, you want to mark out the highs, drag it back, see what it's traded into. Now, by us doing this, we get a good understanding on what price has traded into and whether it's a valid area of interest. Now, as we go to the weekly time frames, you can see here that price has actually traded into what looks to be a fair value gap. So we'd go from the top of this wick to the bottom of the third wick, which would be here, and price has traded into this. Now, this is a fair value gap on the weekly time frames, but as we go down on the time frames, we may see that actually what price has actually traded into is an order block. So as we continue to go down and down and down and down in these time frames, we are seeing more data. Now, I can't go as low as the 1 hour, unfortunately, but what we can do is we can refine this fair value gap. So I'm going to refine it to this point, and you can see that price is traded within this fair value gap area, which is great. So it's come to clear this area before a continuation higher. So it has in fact traded into a valid area of interest. So now we just cancel our replay. We go back to the markets themselves. And what I'm going to do now is just drag this all the way across, just so it matches up nicely with the dip in this market. And we can see that price is traded into this fair value gap. We've seen lovely rejection to the upside. Now, in order for me to get involved in this market moving forward, I want to see a continuation in this bullishness, okay? And I want to find a good area to actually buy into this market. So if we just go back to the 3 monthly time frames, you can see that price has recently just given us a dip before a second move higher. So again, we can do the same thing. We can mark out the low and drag it back and see what price is traded into. There is a hidden order block here, but price has actually surpassed that and traded into something else. So I'm going to go down to the weekly, see if we can find what it is that price has actually traded into. So we'll press the replay button and we'll do the same process. So we'll go down to as low as the 4 hours. Nothing seems to be showing itself here on the 4 hours, nothing on the daily. Let's see if we can go to as low as the 1. Okay, perfect. So it looks as though there is a wick here. This wick may represent an order block, hidden order block on the lower time frames. The reason why is because in order for this wick to be created, we will have seen price trade down to this point, and what's happened is price has shot up, closed here, and then there's been a continuation in bullishness. So this area would actually be seen as unmitigated within the markets. Unfortunately, again, I can't go down as low as the 30 minutes just because of how far back this data is. But based on our knowledge with order blocks and the wicks that are put into these markets, we have a good understanding that this would represent an area that's been left unmitigated. Now we're going to go back to the daily time frames and we're going to do the same thing. So we're going to get this area in price and we're going to drag it across. Okay. Now this acts as our second area that we could have got involved in some bullish positions from. Now, because price has traded this low, we now understand that realistically price shouldn't, well, there's nothing for it to clear from here and upwards, although it could come as low as this point or as high as this point. Price could retrace within this area if there is something for it to clear. So we're just going to do our due diligence here. I'm going to mark this out as an area of interest because this here is a hidden order block. Price hasn't come to mitigate. So I feel price could drive as low as this before a continuation higher. So this could actually just be part of the corrective phase because you can see here that although price has gone on to create a high, we are actually still within this bearishness. Until price surpasses this point, this is not actually considered a new protected low. So price could come as low as this point to continue this bearish structure and then go on to give us that new bullish leg. At the moment, we are seeing a decline in the value of these precious metals. The same applies to gold, and we're seeing the same thing happen with Bitcoin. So I do truly believe that price is just putting in a deeper correction with all of these markets before the next pump. So we really want to be patient, do our due diligence, and wait for the perfect opportunity to get involved in these bullish positions from. So you may be wondering, well, what makes you believe that price is still within a corrective phase in this bullish market? Well, as you can see here, price has wicked into an area that seems to be holding liquidity. Now, if I mark this out as an area of interest, as this would represent a supply zone, you can see that price wicks into this perfectly. I believe that price is going to, it may continue to trade us higher, maybe into the 50% mark, and that's where we're going to see the continuation to the downside. Now, once price trades down into this, it's going to clear any inefficient structure that was left over with this candle here, and then we are going to see the next pump to the upside. So my thoughts are this exactly. I want to see price either trade up to this point before trading us lower, or we just see a continuation bearish from here on out down to this point before that next move to the upside. Those are my thoughts and opinions on this market, and I don't see why price wouldn't and shouldn't do that. Now, if we get our path tool out, you can see that we are still following the laws of bullishness. We have a low set, a high set, second low, second high. This is just part of the impulsive wave on the extreme higher time frames. I don't see why this isn't a possibility and what we may see this market provide us with. Going back to the daily, we could refine this area more so if we wanted to this point here, which would give us a more specific area in price. You can see this is an unmitigated hidden order block. price comes to wick into this perfectly, and we've seen rejection to the downside. So it may have cleared enough liquidity to the upside in order to trade price lower. However, the entire zone was obviously a lot larger than that. And what we may find is price comes to clear this unmitigated area up here, which is still within this zone, but it's actually closer to the 50% mark before that full move to the downside. So if you wanted to, you could either refine your zone to this point, or you could refine and have another zone like this, or you could just have this whole area marked out, as I feel this is what we should be concentrating on realistically. You can see that this wick here wicks into this unmitigated candle, and you can see that this wick here wicks into this hidden order block. So we are seeing that these areas are becoming mitigated by price correcting. We just didn't see it happen within this area here, so I'd love to see price trade up, give us that bearish move to the downside before we get involved in those bulls. So what I'm going to do is I'm going to actually give you guys the area in price for you guys to get involved in this market if you wanted to. So 15,634 is the area in price I would be looking to buy into this market. 15,275 to 15,634 is where I'd be looking to get involved in this market. This is against the US dollar. And this is where I'd be looking to buy in. Okay, in order for us to look to go short, if I'm being completely honest with you, I probably wouldn't want to go short, because in order for us to have full confirmation that this here is still part of the higher time frame correction to the downside, I'd want to see a break in this low. By that point, price is already approaching our area of interest. So I would probably be holding off now, and I'd be waiting for price to put in or continue this correction to the downside before I look to buy into this market. So what I would suggest is you guys head over to the weekly, mark this area out for yourself. It is a hidden order block. Mark it out for yourself, wait for price to trade down, set your alerts, and we should go from there. But ultimately, bullish market, so we should be looking to buy in. Just find those secure areas of demand to actually buy in from. I do believe price is currently within a corrective phase, so it'd be a bit risky buying into a market that's putting in a bearish correction. Now, this case study video has been quite quick, it's quite brief, just because there wasn't many zones to go over. This is a market that's quite evident in how it's played out over the course of the past 10, 20 years. If you have any questions, as I say, with regards to this analysis or this market itself, please leave them in the comments below. And if you have enjoyed the video, don't forget to leave it a like and share with your friends and family. Just remember that precious metals are always going to hold value. These are assets that are always going to mean something to us, and they are always going to be backed when it comes to currencies. You know, if the whole world went to pot tomorrow, we would go back to gold and silver. So we've got to remember that these currencies are always going to, that these precious metals are always going to hold some kind of value to us as consumers, with both supply and demand. They're always going to be exchanged in price. But yeah, I hope you guys have enjoyed this video. If you learned something, then brilliant. If you're unsure about anything I've gone through, again, leave the feedback below and I'll get back to you as soon as possible on that. But other than that, guys, I hope you guys have enjoyed, and we will catch you all in the next case study video.